quick shout out to today's sponsor, Katana. We'll hear more about Katana and their ongoing pre-deposit campaign later today, but for now, let's get into the episode.
Nothing said on ZeroX Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Boccaccio, Ryan, and our guests may hold positions in the companies, funds, or projects discussed.
Hey, welcome to another OX Research live stream. I'm joined today by Carlos and Mark Arjun from the research team at Blockworks, as well as Ian from Kairos Research. Two research powerhouses out here, as well as I guess you say a notable member from the WolfSwap team. How are we doing today, guys?
All good. How about you?
Doing great.
Yeah, all good on my end.
Yeah, can't complain.
He really leaned into that one. He's going full facial expressions. I want to get your guys' thoughts, I guess, before we talk about anything. Thoughts on markets. I know, Mark, you shared some interesting data around tariff revenues, which I want to pull up. But the one thing that I've seen that's been like a consistent theme, at least for the past, I don't know, maybe a few months at this point, ever since the markets kind of had a scary moment at the beginning of the year when it was like max fear, is the kind of like word on the general street is that, you know, admin and markets and the economy, like, you know, basically forced to kind of pump assets by printing or devaluing the dollar, et cetera, et cetera. And a lot of the conversation I just see is like, you know, all in risk assets before, you know, hedge funds and whoever else has to like slowly scale into the trade because they're offsides or whatever. And it just seems to be this view of just like, yep, I'm, you know, just long the market and just be in because we're on a train ride up. I don't know if you guys are seeing the same thing, if that's like the kind of prevailing view that you're seeing, but I feel like I see a lot more talk of like, you better own gold, you better own, you know, Bitcoin, you better own assets because the dollar is like zero forever.
I mean, I'm definitely seeing more of that, but that's just been my view on investing for the past 10 years. Like, you better be invested at all times because fiat is just a declining currency. So I mean, like, it's nothing new for me. Maybe it's my own like echo bias and stuff. But yeah, that's definitely a new trend now. I think people are understanding it more after like years of inflation and these fintech platforms making investing and education a little bit easier for everyone.
Yeah, definitely would agree with that. I think also post-COVID, you've seen a lot of like what's called like more developed nations really struggle with all this stuff as well. Like, I think social programs have it's been kind of like pretty easy to bait policymakers into shelling out tons of money to devalue their currency in favor of getting votes. Like, even if you look at like a country like Switzerland, which ran like a budget surplus for a while, they're now far gone the opposite way. And that's kind of happening in like a lot of these countries that used to be kind of like renowned for it, you know, running their government smoothly and like, you know, not spending more than you're making and all these other things. So I think it's kind of a one-way street with fiat. I think everyone's trying to realize that as well, like Mark said.
Yeah, I mean, we're seeing that with Germany too. Like, Angela Merkel ran surpluses. I mean, she was very famous for being very fiscally conservative, ran surpluses for years, and now Germany's like, we need to go into deficit. We need to increase military spending. We need to increase this. We want nuclear back. It's like a big shift all around. So interesting times. You know, macro moves slowly, but it seems to move quickly at the same time.
Yeah, and maybe that's what I'm hinting at is like, it seems there's more urgency. Like, I would agree with you that like, I think when you're in these like FinTwit circles, you see a lot of those personalities of just like, you know, I'm fully allocated to gold and assets and whatnot because, you know, pull up the chart of the dollar's purchasing power over the past 100 years, all the classic, you know, engagement bait tactics. But there seems to be like more urgency in just like they have to print, they have to do debt, they have to do XYZ. So risk assets up and to the right. I just find it interesting, like how quickly that sentiment comes roaring back when, just a few months ago, it was like tariffs, are going to destroy the world, assets down. Like we could go another minus 50% from here. You know what I mean? Like pick your favorite thing, but it's like in the moment, the urgency is like always, whatever the current thing is, the urgency is always max, like at the top of the bar, which I find very funny.
Yeah, when we see politicians swing their opinions, when we see the feds around the world, central banks around the world swing their opinions so quickly, you realize like somehow we all are just guessing and don't really know what we're doing, but in the long term, it seems to work out anyway.
Yeah, that's fair. I guess speaking of market movements, the one, I guess you could call it one. I mean, there's multiple sort of big stories. The crypto markets and like a lot of larger assets from prior cycle have been moving quite heavily. ETH is on its way back to like the 4K mark. I think it's sitting at in the 3,800s right now, if I had to guess. Which all of the ETH bulls are saying "I told you so" after after the ETH BTC pair finally goes up after a few years, saying "I told you so." I think the one thing that I'd like to get into is like conversation around ETH was very doom and gloom, beginning of the year and even prior, like coming into this year. A lot of concern about like, shipping all the execution away, giving up the moat, not scaling the L1. And there was a lot of urgency, I think, beginning of probably Q1, end of last year around, we need to really ship and improve Ethereum, the chain itself and the services that it offers to kind of keep competing in this market. I'm curious, Mark, from your view, like how has that been going? I don't know that we've seen a ton of delivery just quite yet, but we have seen like a shift, at least in like the EF, some of the attitudes and like opinions around what should and needs to be scaled. Curious what progress looks like there. And I'm almost wondering, like, are eyes getting off the ball a little bit now that like, ETH's up like 2x in a few months?
Yeah, definitely. I mean, the shift started January 1st. Ethereum News is actually tweeting from its ethereum.org Twitter handle. So it's like, okay, let's just start to use some of this momentum. It's okay to market our own DeFi projects, our own coin, the tickers, ETH, that kind of stuff. But I think more maybe in terms of like shipping, yeah, we they had then Kuhn last year. I mean, earlier this year. I mean, last year, and then at least now there's Fusaka already established for later this year. And I mean, Fusaka's updates are finalized. We know what's going in. The headline is going to be PEDAS. But then already the new topic has moved on to Glamsterdam next year and what needs to go in that. So I kind of like how an upgrade isn't even around the corner yet. It's in like probably November-ish time if they're on track. And then we're already talking about the next update. And on the last developers call, they're debating between ePBS and 6-second block times, which is like cutting the block times in half. They're 12 now. And I think one kind of soft takeaway was that after the call, I think the core developers were more leaning to ePBS, but they did recognize that it seems like the community wants 6-second block times. And like normally when you listen to these calls, it tends to be more about the core developers and what their teams are saying and what their research is. But it's kind of refreshing to see them talk more about what the community wants and what more from a more holistic point of view. And then even more importantly, I think in terms of actual shipping, like Ethereum gas limit has increased 50% for the year, like since February. Like we're up, we were at 30 million earlier this year and we're at 45 million now. So that's, that's something to be commended about. And I'm hoping at least 60 million by the end of the year. So that would be Ethereum doubling their gas limit in 1 year. And then if we could halve the block times next year, that would be a huge improvement in just 1 year's time. I mean, all of this is well and good, but I really think the price just comes from Tom Lee shelling it on CNBC, these ETH treasury cores, and then the FOMO with the ETH ETFs coming in as well, and the reduced selling pressure from Grayscale. I think those have a lot more to do with it. And I don't think I think the Ethereans are coming out and saying, haha, I told you so, but I hope it doesn't mean that they're going to rest on their laurels quite just yet.
Yeah, I mean, you have some who are saying, it should be valued at 76 trillion or whatever the number is by averaging, some of the largest markets in the world together. And then, but yeah, I do think that sentiment, I feel like I'm seeing similar viewpoints around both Bitcoin and Solana as well, to a little bit lesser extent. But like a lot of the recent move, I mean, there's just a ton of buying pressure from these treasury vehicles. And obviously for ETH, I think it's probably been the largest buy like ratio to its market cap relative to Bitcoin, at least in the recent term. Obviously, Saylor has shipped a ton of money into BTC over the lifespan of that vehicle, but several billion into ETH over a couple months is pretty massive.
Yeah, I mean, Ian, sorry, I'll let you go, but like, just to end that note, like Ethereum ETF's best month by net flows was December last year at $2 billion net flows. And in the past 2 weeks, we've had $4 billion of net flows, right? Not including any treasuries. So that kind of shows you the multiple increased demand recently. But yeah, Ian.
Yeah, no, it's a great point. Like the flows have just picked up like on a ridiculous amount. And I feel like the ETF inflows at this point now, it's a bit hard to discern whether that's natural organic flow or if it's people trying to front run the treasury companies, or also just like kind of, because like these things will get announced, a little bit before they can actually purchase. So I think the thing to watch definitely is like the treasury companies at this point. I would kind of view like the ETF flows as they're not the same types of buyers, at least, as these treasury codes. And yeah, the treasury codes are interesting because with the Bitcoin ones, it's like they can't really do too much with it. Like I've seen like MetaPlanet has like they're selling like covered calls and like generating a bit of yield there, but I mean it's like kind of risky and they're not making that much. Where a lot of these treasury codes seem to be like immediately staking it, and so they're essentially going to be competing with each other on how they can increase like ETH per share. And because they are like under different regulations than let's say like the ETF providers, and they're not like RIAs, they have the authority or like the mandate at least to like be able to go on chain and do some other interesting things. So right now we're just seeing them stake, but I wouldn't be surprised by end of year to see some of them start leaning into maybe some like curated vaults on chain and start like kind of messing around with lending protocols and other things to kind of generate a little bit of additional yield there. But yeah, I mean like Sharplink, you can go on their like Arkham account. They've got almost all of their ETH staked. A lot of it is with Alluvial through like their like institutional LST, and then this morning they were sending like $70 million clips to Figment to stake over there. So I think that's pretty interesting, but we'll see where this ends up in the longer term.
Yeah, so maybe we see a little race to into some leverage looping. I don't know. That could be interesting.
I was literally just about to say that. Like, what's the risk profile when they start to leverage loop restaking tokens and Aave or something? Like, is the additional 6% going to be worth 6% annually going to be worth the risk?
Yeah, I wonder if they'll leverage loop or if they'll just supply naked ETH to the market as well, because like I imagine there's quite a lot of other people with a healthy appetite to lever up ETH in this sort of environment. So. And we saw like, people that I guess it was like mainly Justin Sun he like withdrew like a yard from Aave and of like mainly Steth, and he was already like levered up and looped a little bit. And that kind of sends like ripples all the way down through the market. But I think there is healthy demand to borrow ETH right now. So I think they could kind of get away with like just being on the supply side and not having to like loop themselves. But I think it would get yeah, I'm sure these guys are getting like, pitched by all the vault curators right now to try to get like a slice of, the multiple billions that are flowing in there, because like they have an opportunity to do something that the ETFs right now don't. So, and it's quite competitive.
It's interesting because I don't know. Do we see the recurrent? Like they're already doing sort of like this wrapped it's already like this weird wrap strategy, right? Where you're selling the shares and you're buying this underlying asset and then hoping the shares, go to some premium valuation. They're, and obviously if they have ETH on chain, I mean, it opens up an opportunity to then launch another vehicle, an on-chain token that is maybe like a representation of like some wrapped form of yield that they're generating by doing, we could get into like a time wonderland situation or like a Ohm situation potentially, like, sell some bonds on your on-chain like yielding positions, really like run the strategy on top of the strategy, get some reflexivity going in there. But yeah, I do think to your point, Ian, like, I mean, you'd be compounding a lot more risk into that design by going that route. So I guess we'll have to see how degenerate some of these guys are going to get.
Yeah, because also like when they're staking and they're all playing the same game, and then the ETFs add staking, that's compressing the net yield naturally. So it's like they are going to have to lean into things that are a little bit further out in the risk curve if they want to make a difference.
Yeah, that makes total sense. Cool. I think great coverage of ETH. Another, I think on the roadmap side of things, another area we want to talk about is Solana. Before we do that though, I want to do a quick shout out for our sponsors for today's stream. So Katana, this episode is sponsored by Katana. Katana is a DeFi-first chain built for deep liquidity and real yield by redirecting chain revenue back to active DeFi users. Join their 1 billion cat campaign today. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more, thanks to Katana. This episode is also brought to you by Ledger, the global leader in digital asset security. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your crypto and logins, trusted by 7 million users and securing 20% of the world's digital assets. Thanks so much to our sponsors today, and back to the show. But yeah, I guess speaking of roadmap talk, like it sounds like at least for now, like ETH devs, they're kind of moving along with the pivot, looking to kind of accelerate the network. The Solana side of things, it seems as well, like we've seen some improvements there, and they're moving along. So I guess the big recent stuff, like obviously Jito Bam was pretty interesting, announced last week, kind of potentially changing up how like fee markets and those modules might sort of play into the dynamics on chain, but as well as 60 million CUs. The Sol was, I don't know, Carlos, if you can correct me, what the limit was prior to that. Was it an increase from 50 to 60?
Yeah. So they made a first increase this year of 48 to 50. So that was just a 4% increase. And then they did a 20% increase from 50 million to 60, which is this one. And then they're planning another one from 60 million to 100 million CUs. So they're gradually like increasing like the size of the like, yeah, upgrades, if you will, on the block size limit. So the first ones were just not very impactful, but they wanted to like test out if there were any like loose variables that were being impacted from increasing the CUs, and now they're like being more aggressive with it now that you have like kind of tested it out.
Is from your understanding, is there a feel for, like, if we're going to jump from 60 to 100, is there a feel for like a relative kind of cap based on today's hardware? Like, do they think that we could go to 150 or 200 reasonably reliably, or is 100 kind of like where we think we're at right now?
So ANSA's plan for this year was to double block space, and it started at 48. So 100 will be kind of like that goal completed for this year. But I think like obviously the goal is to keep increasing it over time as long as you have like the capability to do it. The other side of it is like, is there demand to actually have like 100 million CUs? With the 60 million CU increase, what you saw on chain was that many of the blocks were not getting filled. So you kind of have like this question, is it like really necessary to like keep increasing it and like risk some potential like downsides, or like because like, yeah, you can increase the supply, but you also like have the demand side. And I guess the point is like to have like the capacity to keep like going on like periods of like huge demand, like the Trump meme coin launch or like the Pump ICO. But like, I'm not really sure if there's like sufficient demand in chain like today to like justify like rushing like a 200 million CU increase, for instance. So I think like the pace they're executing right now is like on track with the demand side.
Yeah, go ahead, Ian.
Yeah, I would agree. It's like partially, I think. I think you should probably build for those edge cases though. And also like right now, like what's happening on Solana is essentially it's risking becoming Ethereum, where it's like you're as fast as your slowest client. And like right now, it's like Financer is very, very underutilized. So like increasing the CU limit there and getting more network stake actually running Financer, I think is gonna be a great thing. Like when we started running Financer on our validator, like we were instantly able to like trade more transactions, pack like blocks faster, and ultimately like give like better rewards for our stakers. But like to give you a perspective of like what Financer is actually capable of, it can do like 1.2 billion CUs per second in like a fully optimized condition. So like that's kind of also now what you're seeing over on like Fogo, where it's like every single validator over there is running Financer. So like if you want to get the most out of Solana, you want to get the most out of like Financer itself. Like obviously like Agave is still like quite a good client, and like the Yanza team's like working to ship things pretty quickly, but ultimately I think you're gonna want to be able to get the most out of your highest performant client, which right now is Financer. So like 100 CU limit is like just the beginning of where things should actually be. Especially if you actually want to be able to handle like global state. It's like to Carlos's point, like demand is maybe not there right now. But like it's like what are you actually building for? Because it's going to show up one day, and you want to be able to handle it. You don't want to have the network breaking. And also like generally, it's like I feel like you should be far more ambitious than the supply side or what the demand is showing you today, at least.
Yeah, I agree. I totally agree with that. Like I was discussing this over the weekend. Like, is there like any potential risks you see from increasing like the block limit, basically? Like obviously we know like what are the benefits, but are there any like downsides to doing so?
It depends what you're looking at as a downside. I would say general implications would likely involve, let's say, like smaller validators that are maybe running their validators in their homes or something like that, and they're like not utilizing machines in data centers. They would have to probably eat the cost and either upgrade the machine to be able to have like better hardware to then handle like this computational intensity, which is like increasing, and or just like rent a machine in a data center and do it that way. And whether or not you view that as like a negative, I think depends on your ideology of like the general network and decentralization and these sorts of things. Of like, do you view decentralization as kind of like the ETH maxi mindset, over it's like you should be able to like run it on the simplest hardware, or do you view it in the sense of it's like geographically distributed? Because honestly, like I think the latter is probably a bit more important and just like than just keeping people on the network for the sake of keeping them on the network. I don't think that's kind of the path Solana should go down. So I think that's the implication, and not necessarily saying it's a bad thing.
Yeah, no, I agree with that. Yeah, the other thing is like increasing block limits kind of plays into the increased bandwidth side of the equation. Like I think eventually we'll see like reduced latency in the sense of like decreasing block times, which right now are 400 milliseconds. I think after Alpenglow, voting costs will basically go to zero, or they will be removed like in the majority of their sense. So like kind of like that is the biggest hurdle today to decrease block times. So I'm also excited to see like proposals to decrease block times below that 400 millisecond threshold and how far they can push it.
Do any of y'all know what the latest data on is? What percentage of Solana's network is running Fire Dancer / Franken Dancer?
Yeah, we have it on our dashboard. I have to check the latest numbers.
And then
The last I checked, it was like, I think it was 10-11% running Frankendancer, but I'm curious what it's at now, because they have begun like a delegation program and these sorts of things to incentivize people to run this client.
And then when we're talking about, the network is as slow as the slowest validator, if it got 50% plus and even, quality stake weighted, would that change that dynamic?
50% running Firedancer?
Yeah.
I'm not entirely sure, to be honest with you. I don't know what the exact threshold would be, but it's like they would still be dependent upon like how fast the Agave client can like produce blocks and what it can handle from that sense. But I'm not sure if there's like a thing for if there's an exact number. Maybe Carlos, but I'm not entirely sure on that. I think that would still be the implications of like the rule would still apply in my sense.
Pulling up the breakdown here, Carlos, I think it got blown up a little bit, so it's a little blurry, but I'm assuming Firedancer is one of those smaller guys.
Yeah, sorry about the image quality there. So basically, Agave Jito is like 88% of network stake. Frankendancer Jito is like almost 10%, and then
Here we go.
yeah, you have 2.6% on just Agave, and that's basically it for now. I'm always like I wonder when Firedancer like is going to mainnet, like the actual Firedancer. Ian, do you have like any guesses or like?
I don't know for the full version because, I mean, if I would recommend everyone goes and listens to the Lightspeed pod that Jack did with Mike McGee from the Firedancer team, because he kind of makes you understand how difficult it's been for them, and you kind of understand why it's taken so long for them to, get this even to like the Frankendancer point, because they're essentially rewriting the entire code base and then also trying to like iterate in real time as the Onza team is applying their own changes. So then with like introduction like Alpenglow, which like completely changes the consensus, it's like, okay, that's another thing they have to go and do. Which again is like another reason, like I think like Fogo is quite an interesting like experiment at this level where it's like you don't have to deal with that, call it tech debt right now. But I think that's something that the Solana ecosystem has to kind of figure out how to deal with.
Yeah, how do you think about like this SBM chains like Fogo in the context of Solana is like improving constantly in terms of like more CU limits, like they want to reduce latency, like they have now JITO-BAM, which will allow for like these sequencing challenges like you previously had, like you can now theoretically have like order books or perp dexes on the L1. Like, does this change your outlook like at all for like Fogo and these other SBM chains?
I think no, like I view them as both like separate things. Like I think Fogo is doing something that Solana will not be able to do, just because like, I mean, if you're taking the IBRL to its like absolute extreme, you're putting all the validators in the exact same data center and you're putting them all right next to each other. And so like they're able to do like 40 millisecond blocks, which is just kind of hard for us to even comprehend. Like for light to realize we're even looking at something that's like a 300 millisecond response. So it's like by the time we even like see that our screen is like blue or whatever color it may be, that's like many blocks have already passed at that point. So it's like just a completely different thing of what Solana is trying to do, and they're going to be like focused and be like trading focused, whereas like Solana has a full-fledged ecosystem of consumer apps, all these other things. But obviously, like we know, like trading has like proven product market fit in crypto. So I think likely we're going to see them like Fogo be the chain that can facilitate the most real competitor to Hyperliquid from a performance standpoint, mainly because they're doing a very similar architectural approach.
Yeah.
Is
Yeah,
there
I
not
like
a
that.
drawback? I was just going to ask Ian, like, is there not a drawback there where, I guess, are they looking to distribute among multiple sort of like grouped data center locations? Because obviously if you put all the validators in co-located in New York, then if you're in Singapore, like getting your message there and back, like it doesn't matter if the block took X milliseconds at the server, like you still have to wait for your round trip, versus if there's a node next door to you, even if the block at that node is 200 milliseconds, but you can talk to it in 12 milliseconds. There's like an inherent trade-off there in not being distributed.
Yeah, there totally is. The thing with that was they originally were considering rotating the validator set by geographic location across 3 different data centers from like the economic hubs of the world. So it's like if it's Asian trading hours, all the trades are routed through the Tokyo data center. And then if it's European hours, everything's run through Frankfurt. And then if it's US hours, everything's like run through Jersey. And these are like already places where the world's largest trading firms are already co-located for the most part around these places. So that was the original plan. And then I've also heard rotate it every hour to make it a little bit more fair, because to your point, Danny, like that is like a legitimate concern. So we'll see what actually ends up happening in mainnet. But like that's kind of the way they try to combat that.
Yeah, they call it follow the sun, like
Indeed.
model, because like you literally like just follow like the trading hours around the globe, like around.
Yeah, I guess it's like it's like remaking TradFi markets, I guess. Obviously the chain would be up 24/7. It's not quite the same thing, but yeah, I can see that. I guess any other comments or thoughts there? Like it seems like we laid a lot of the things out, right? Like Fire Dancer, there's kind of there's a little back and forth there, like Fire Dancer improvements versus like what Anza's working on. Alpenglow kind of getting tossed into the mix and bumping up CU limits. Anything, I guess, is there anything else big outside of those like main items that the Sol devs are quietly shipping on to improve the network? I guess JITO-BAM is kind of the other one that's like an immediate stopgap of like, no, build your opinionated custom execution logic on Solana. Don't build another chain to do that, which feels meaningful.
I think so. I think that's probably the most meaningful change we've seen at Solana to date, honestly. Like, I think they'll unlock a lot of customizable tools for developers and like interesting things that people can build, and ultimately like better the user experience, which I think if you just focus on that continuously, it's hard to lose, because you already have tons of users on Solana. If you can just make it smoother, you can help applications retain more of their own revenue. If you can help them have better execution, more fair execution, minimize like negative MEV, these are all good things. And I think like the closest thing I analogize it to is, and I don't want to arrive at the wrong conclusion by reasoning by analogy, as a disclaimer. But if you look at like Hyperliquid builder codes, I think those are obviously shown to be like a massive success, where it's like there's an amazing core product there that people are then able to tap into. I'm not sure if there's like the same logic around like customizable, like I'm not sure how customizable it is, or if it's more of just like you can plug into it. But I think that's the closest analogy we have, and like now we have like Phantom that's already done 2 billion through their plugin there with Hyperliquid. So yeah, I think it's really good.
My last question on updates around Solana is that do we think we'll see a resurgence of like SIMD 228? Anything on the monetary policy, or is that dead because of like they're going to remove voting fees and make it easier anyway? Like, is there any more discussion about that in any circles?
I think it's highly likely we see another proposal like that come through. I think in general, people are starting to realize how much proof of stake networks overpay for security. If we're even calling it, like, you can call it security, you can call it network incentives, emissions, whatever you want to call it. Like, in general, I think networks are just across the board paying too much, because it wasn't really something we considered at first, and now that like there's real activity, I think things matter a lot more. Like, even when we were talking just now, like, I got a notification like Celestio just had a proposal to reduce their inflation to like 2.5%. So I think everyone's now starting to look at these things as like a actual cost. So I think that's important.
Yeah, I agree with that. And then you also saw like alternative proposals. I mean, Galaxy submitted a proposal like a month after CMD228 failed, but like it didn't get much traction. But I think like one of the core like issues here is that you have conflicting interests, like from institutional providers. Like, for instance, ETF issuers, like once they launch, like potentially with staking, they want to keep a portion of the staking rewards, and that portion like they earn through dollars, so they don't really like care if that's coming from inflation or that's coming like from real yield. They just want it to be as high as possible so that they can have like a higher take rate, basically. So you kind of have like this conflict of interest from like institutional providers or like centralized exchanges like Binance, where they take a portion of the staking rewards and then they just want it to be as high as possible. They don't really care if it's coming from like inflation or like revenue.
Yeah, I think that's a good point. Go ahead, Ian.
Yeah, and like, to prove Carlos's point as well, you can go look and see who voted the largest no votes on SIMD 228. Great question, Big Suck. Oh my gosh, it's John Cenac.
Oh, yeah, I'm distracted. Please finish.
Wow, he's Ian, finish your thought?
I think Bach needs like an intro song.
Hold on, Bach, before we intro you off, you joined at just the right time. Another quick shout out here for the sponsors of today's stream. Quick shout out to today's sponsor, Katana, whose 1 billion cat campaign is now live, incubated by Polygon Labs and GSR. Katana is launching with notable ecosystem primitives, assets, and partners like Morpho, Chainlink, and more. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. And another shout out today to Ledger. Ledger is the global leader in digital asset security, trusted by 7 million users, securing 20% of the world's digital assets. Ledger's newest device, Ledger Stacks and Ledger Flex, introduced the world's first secure touchscreens, making it easier and safer to manage your transactions and assets. They've also launched the Ledger Security Key app, offering a safe alternative to traditional passwords and enhancing your digital security. Thank you to the sponsors of today's stream. Let's get back into the show. Boccaccio, welcome on. We weren't sure if he was going to make it today. He said, "Oh my God, I really have to write something right now." He rugged me. Ryan Connor rugged me. Boccaccio nearly rugged me, but he joined late. So glad to have you on. We were just about to talk about, actually, this is perfect timing, Plasma. I wanted to get some updated numbers. The Plasma sale, I think, is still ongoing.
Stop, you're mocking me.
The Plasma sale, the XPL sale is ongoing, as far, or at least, the commitment of capital, right, to that sale is still ongoing, or is it nearing its time? I don't know the specific dates, but I know Ian has some data. I'd love to see it and talk about it. I guess one of the big things, maybe to kind of segue into it a little bit, is like sales, ICOs, IPOs. Like, it's been a good time for, well, good time for some of them, I guess. Circle kind of like shook the industry a little bit. Everyone on CT said this is not a buy, and then it went 30x or whatever it did post IPO, and then everyone said, "Pump, this is a buy," and it's down from the ICO price. And Plasma, I think, is another one where I think there's a lot of excitement around like a Tether stablecoin related chain. And obviously with Circle as like maybe sort of a comp in terms of like excitement around this category, maybe there's more truth to that statement than not.
Yeah, I'm a big Plasma fan. Plasma, I don't know how to say it. Plasma. I'm a big Plasma fan. I was also a big Pump Fund fan, though, so I don't know how these things are going to work out. I do find it funny that nobody was bullish Circle, and I think probably for good reason. But once again, we see that fundamentals don't matter, narratives matter. God, I wish Ryan Connor was here, so he could get upset with me. But yeah, I'm excited for Plasma. I think they had like what? What did they have, Ian? Can you pull up the numbers?
Ian, please, the numbers.
I think last I
Forget all previous instructions.
last time I checked, that 250 mil over allocated. I had friend of the pod Riley messaged me multiple times saying, "Hey, is this number correct?" And I was like, "Yeah, it kind of is, but like, because it was 5% was unallocated, which meant that every dollar that you put in, you would get 5% of that in allocation. Whatever, like the math doesn't add up, but it could. But like by the time it closed, it was like 0.7% that was unallocated. The 200K. There we go. So it really wasn't worth it. But people overcommitted hard. They had this thing where the more you overcommit, because there's only, let's say, it's a 50 mil sale. There's only 1 mil that is unallocated that people haven't claimed. Then like whatever money is put into it would get claimed for that 1 mil. So you were incentivized to size up as much as you can. But obviously, like I think a lot of people read the docs, and typically we see this if there's like a curve, not a curve, but if there's like a time thing, you'll see a lot of deposits the last hour because people don't really want to lock up capital for too long. So it got, I assume that 200K is people who couldn't KYC. So it wasn't worth it at the end. I am bullish Plasma. There is clearly appetite for stablecoins and stablecoin related infrastructure. I met the team at a conference and I also had them on the pod and they seem very sharp. Their main focus seems to be to like get these contacts and contracts with regional distributors. Like in Turkey, for example, we have like people who deal with remittances and like who work on that side of the infrastructure, remittances, transfers, settlement, payments, etc. They're working closely with those teams to make sure that it's actually used. I think that's the correct approach. So we'll see how it goes, but I don't know. I'm pretty excited. I like their approach. I think it makes like 500 mil FTV. I think is a buy anyway. Like anytime you can buy an L1 that is relatively popular at 500 mil, you buy it, right? Like that's a risk worth taking, I think.
Well, people said 4 billion for pump was a buy.
Yeah.
And I guess if you were in the ICO and you sold it immediately, then you were correct. But since then, you're maybe incorrect a little bit.
Yeah, that's true.
I do think it's interesting. Like you mentioned the oversubscription here. Like I think the average on this dashboard, they did some math wrong and saying it's 15,000x the average, but there's like a 15x.
No, it's actually not. It's just skewed by people that
they're saying per person based, and it's skewed by a guy committing 40 million, but his allocation was like $10.
Yeah, there's not even. So like when the vaults were like
was 0.1 and he put in like 30 grand or something like that.
Yeah, like when the vault was approaching its cap, there was people that were sending like cents, maybe $1, and so like the reserve allocation was like a fraction of a penny, and so like the lead over sub is like oversubscribed by like 33 million, so that kind of skews the rest because he committed like 1.17 mil for a reserved amount that's like a fraction of a penny, which is just hilarious. But like, yeah, to Buck's point on how much this like highlights real demand. You can't really fake it here.
Well,
I think
you're committing
median is
capital
like
like that.
1.8x stuff. Just FYI. I mean, Danny, I know like since you're from an engineering background, it's difficult for you to understand median versus average versus my political science background.
So no, I just didn't realize that they were doing the average of the participants rather than the fact that it is 7x oversubscribed for the total amount, which is like the real number. They don't have that on this chart, but I guess that's easy enough math that they didn't bother to do that. To Ian's point, like I don't know that that's a description of necessarily real demand if you know that all of your oversubscribed capital is going to come back to you. Like clearly, if you know you're going to get 39.9 million back from putting in 40 million, like it doesn't mean you necessarily have 40 million of demand to buy the asset when the market goes live. It just means you want to get as much of an allocation as possible by like maxing out the slider bar in the immediate term. So I think we'll kind of have to see, but I think to your point earlier, Bach, like narratives do matter. I think the Circle like stablecoin narrative seems still fairly hot within the TradFi space. I guess the bigger question there is like Circle IPO'd and is in the traditional equity markets and is running there because folks want an allocation. If you launch a token on chain, I don't know if that applies. Like, do you get that narrative transfer to an on-chain token?
I don't know. I was actually thinking about this a bit today. This is very obvious, but I don't want to talk about it. I realize it's too obvious. It's like that thing I said where like the second iteration is better. I can't do it again. We can move on. No, I don't think you can get it unless they like do some form of, and that's why like the treasury companies have been doing semi well, right? Like it allows off-chain exposure. Yeah. Any other hot takes on Plasma? I feel like Carlos doesn't really speak about Plasma at all.
I was going to ask, but I went into the website and it seems they do. Like, are they planning to add more stable coins that are not USD denominated? And it seems they are. I mean, it says 100 plus currencies on the website, so I assume they're going to.
Yeah, but it could be like 40 USD derivatives. I know that USDC, USDE, definitely. I think they're only going to have free transfers on USDT though.
Yeah, but if they're going into remittances, it seems that it's kind of like a must-have to have other currencies, because otherwise, you lose the whole point of like.
It doesn't work.
Yeah.
No, I agree with you.
All right, no more hot takes on Plasma. Or Ian, do you have one?
Well, I was just going to say, Bach and I kind of came in bull up on this one. So if anyone wants to give like a bear take as well, maybe that's welcome to kind of even it out.
Yeah, I think I'll maybe run the bear take a little bit. Though, Mark, I'm hoping maybe you have something as well, or Carlos, to hop on the train here. But I think the question mark is sort of just like, we see this over and over again. Narrative pops up, launch another chain, think that that's enough for it to be worth a lot of money, even if nothing moves over there. I know you made some mentions of like, maybe there's some strong partnerships with relevant jurisdictions or large partners who have large amounts of user bases that are impacted by like a stablecoin type network. And maybe that's true. I do wonder though, if this is just like, if it's leaned as like a stablecoin chain, like a payments chain, I don't know, will the valuation be as exciting as a trading focused application with high fees and spreads? As we've seen, like just transferring dollars is the multiple on that is not as exciting, and the fees generated like per transaction is not going to be as exciting from a valuation standpoint.
Yeah, I mean, am I upset that I didn't do the Plasma round? I mean, we just passed the Genius bill, so there's going to be lots of banks and institutions issuing their own stablecoins using their own networks, and like something I've really wanted is like, when I send USDC on Solana and I pay that fraction of a cent, I think that's obscene. I want it to be absolutely free, and I would love another chain to bridge to with another token, because that just makes everything easier. So yeah, I'm all here for it.
I don't know. I think, yeah, that's a fair point. But objectively, Mark, man to man, mano a mano, 500 mil FTV is a good price to get into that Plasma.
No, I agree. I was just providing the bear case.
No, it's a good bear case. That's the big thing, right? Like, to be fair, we have seen purpose-built chains do relatively well. So I don't know, but that might just
one of them,
Hyperliquid.
Tron. I know that this is like probably crime, but like Tron has a lot of revenue now, and they're like mostly like payment focused last time I checked. So
Yeah, that's true. Tron is, I don't know if it's a lot of crime. I just think they were really early and they knew exactly what they had to do and they just did it. And
well, then, but then that's the kind of like a bull case for Plasma. Like you can show like you can actually do meaningful revenue, like with like a payment focused like chain.
Yeah.
Yeah, the bear case. The bear
$4.
case is like trying to redo what Tron did and like get all these users who are already just like transferring their USDT via whatever app and wallets they're using to like go to this new thing that's untested. How do you do that at scale?
Yeah, especially with like remittances and payment. Like it's the average person doesn't want to switch from platform X to platform Y. The only thing that might affect that now is that Tron fees are quite high, and that's like what Plasma has been pushing forth. I think Tron fees were like $4 per transaction, which is pretty high if you're taking home like $50, $100, $20, whatever.
I would love to know like where is volume like originating from in terms of like front end, if it's like via Binance or like what's the main like way people are transferring like Tron stable coins, if that makes sense. Like I don't know if like when you transfer, like I know Binance allows Tron, but I don't know if like that's the main source of like.
It might be Binance. I imagine it is Binance. We should ask Daniel Smith to build this out. If he wasn't on vacation, he could work on this, but he's gone for like a month now. We'll see.
Yeah, I think also it's probably a bad idea to assume that, or like discredit the network effect that USDT has across like all of crypto. And then also like when you just create like better actual like unit economics for payments, where it's like, okay, I can send $1 to anyone in the world for free. I think that's like really powerful. Like it's kind of like we wrote like a piece about this, and like we're biased because like we're investors. But like we think like ultimately like if you can get a ton of stable coins in one chain, you're also going to attract a bunch of like second and third order effects of like DeFi protocols popping up on your chain that are actually getting used quite a lot. And so they've got like some good initial launch partners with Aave, Curve, Athena. And if you can have, like I think like the real unlock for people like anywhere in the world, it's like, okay, if you can have like 0 fee transfers, and you can also have a savings account that's like maybe the supply side APY on Aave, and you're getting like, you know, real yield in dollars, and you're anywhere in the world that's not the US. I think that's like quite a big unlock. And just like kind of play that out over a long enough period of time. Yeah, I think it's a killer product.
That's fair. Great take, Ian. You know what is? There we go. This episode is brought to you by Marinade. Marinade is focused on developing staking technology that strengthens the Solana network and connects SOL holders with the best staking rates available. With solutions for both DeFi and TradFi, Marinade brings billions in liquidity and security to the SOL market. Thank you, Marinade. That's my first ad read ever.
You did really good.
I thought
Incredible
so.
read.
That was solid.
I was really nervous.
I'm converted.
Are you? Well,
Right,
Ian,
I'm
you're actually a Solana staker, to be fair.
I'm actually we're a Marinade power user.
Oh yeah, because
and so that ad just kind of, I like that ad. That was a good ad.
You use Stake Auction Marketplace?
We use the Stake Auction Marketplace.
Sammy? Wait. All right, let's switch to Danny. I'm kind of derailing this thing, so
no, you're good. I only had I had one last thing I wanted to talk about. The OX Research Telegram was going nuts over the weekend. I think the timeline also has been all over this. All on Sunday, when everyone should be touching grass, they are instead talking about Zora. We touched on it a little bit last week, but I think the big question is like, is Zora the future of finance? They've taken I think I have a diagram here. It seems like the model it's pretty similar, right? Like if you take a launch pad like a Believe or a Pump Fund where you have
is this too much?
What happened? You're killing us. Oh, there we go. They they took the model, I think pretty similar to like a Believe type model where, you take a couple percent and then you allocate kind of portions of that to different parts of the stack. So like, a percent to the creator, a percent to the LP. And in Zora's case, then a percent to Zora itself. So I think they have a 3% tax on swaps. That's kind of fueling, I guess, the sort of Zora tokenomic flywheel. I guess the thing to point out is that since it started getting talked about recently, and maybe we should zoom out a little bit, is posts have kind of been skyrocketing again ever since they dropped off from like April timeframe was like pre-airdrop excitement, or around then, I want to say. And then it, we were bearish at that time, and then it kind of faded a little bit, but has made a strong resurgence in the past few weeks off of them, like, announcing this redo of their, creator tokens, the Zora token. They're like all kind of connected in this model with the taxing on swaps. I don't know. Curious on your guys' takes. I think there's been some conversation in the Telegram, like, could see this model working, but it from my POV, it just seems to be like taking the kind of Launchpad model and just sort of applying it to the Zora, like make every content and content creator a token design.
Yeah, I can. If nobody else has any urgent thoughts, I'm available.
Thank you, Bach. You're so kind.
So I've historically never loved Zora, and I think nobody's ever like. I don't know how much sense it makes to create a social network where you can like spend $1 to buy somebody's coin or something. But on the other hand, I think a lot of people, this similar thing happened with Solana as well. Like when things first started popping up, they were like, oh, but it's only making what, like $8 a day, or like there's nothing really happening on the chain. They don't really have, like, it's still dead, et cetera, et cetera. I think over the past few weeks, people have been kind of focused on this idea of REV and revenue and fees and whatnot. And they're like, oh, like, but it only makes 10 grand a day. Like, yeah, okay, that's the case 2 weeks ago, but now it's making 360K. Like it made 360 grand yesterday. Not a huge number, pretty good. And it's like one of those things where people, I think, often forget in cryptos, because there's, I don't want to say it, but there are like, not flywheel, but like it's a lot of Ouroboros action. The more price goes up, the more people are interested in betting on assets on the protocol or the chain. They do more transactions on the protocol or the chain. There's more revenue and more fees. The price goes up even higher. And this is something that is very different to how TradFi works, because nobody's like, oh, Walmart stocks up, I'm going to go buy some cheese there. It's not like what happens. No one's like betting on the cheese at Walmart because no, but I'm being serious. Like this is an actual thing. No one's like, oh, I need to buy 8 chicken breasts right now, I might hit a 10x on it. No, people are like, okay, that's fine, I don't really fucking care. But on Zora, if Zora's up 50%, you're like, holy fuck, I need to buy some. I need to bid. Like, I'm gonna go buy Fijao on Zora. If people are there, it might go up more. And then that links to activity going up, that links to fees going up. So this is something that we all, I think, know, but it's also why it's kind of difficult to value things exclusively on fundamentals, because fundamentals in crypto change in 3 days. Like if somebody makes a lot of money on something, then it shifts drastically. So I think that's my only take. And like, is Zora the future of finance? Potentially. I mean, they're putting it into the base app. It depends on how much push Base puts into its ecosystem. Like we're seeing now L2s do heavy pushes to their ecosystem the way that Solana did for like 2 years, where they posted about everything. Like now Arbitrum has on-chain labs, they have Talos. Base has very clearly pushed Farcaster and Zora, maybe less Farcaster these days, but still heavily pushing Zora. So we'll see. I don't think you can immediately say you're bearish on these things. I've also seen so many people try and short Zora now. Like, I think funding on Hyperliquid's still pretty insane. It was like negative 1,200% yesterday. I don't know what it is, but like you were getting paid 2% a day to long something that was going up 50% as well. So I don't imagine it. Like, it could be a fad, but it's kind of like a teaching moment for people. You can't just be bearish on something because things change very quickly.
Yeah, I'll give you the credit on the base app one. We have the data on daily posting accounts, and like a few thousand a day are coming from the base app. And when they rolled that out initially, it caused a big pop. It does make me wonder if like people are using it on the base app and then converting to just using Zora's app, because Zora usage has been kind of up and to the right, and the base app usage has been sort of flat and a little lumpy. But yeah, I do think that's a fair point.
There's one thing I would like to highlight, like from what Box said, which is like, if you look at like historical examples, for instance, in Solana, the best time to invest in Sol was before it did any revenue or any meaningful revenue. And you can like kind of see that with a lot of other applications or layer ones. I think like obviously like valuations are forward looking, and like a lot of people like oftentimes forget this. So like I wouldn't worry too much about Zora. Like if Zora is not making a lot of money today, like I don't think that's much as a worry as like if they get like the users and like if people are posting there regularly, like eventually I think they could monetize that, and like you could have like meaningful revenue there, like in 6 to 1 year or 6 months to 1 year or whatever. Like, so I think like oftentimes people forget like forward looking is what's most important here.
Yeah, I think those are all good takes. I think one of the things that Block said as well is really important. Of like, there were some people just like really trying to go short on this, and I think going short on like small market cap tokens in a network where like the base asset has run up massively is probably not a good idea, because there's always people looking to liquidate shorts. So I shared some data there in the chat here, and you can kind of see the liquidations there, and like looks like those are pretty responsible for like the price run up. But I think like token price moving in like insane candles like that is also just great marketing and gets people using the chain more or the product more. And I think there's like kind of like that feedback loop there. And like it's still like it's like a 230 mil market cap project, and there's like 138 mil of open interest still. Like it's like not normal. But I think the activity is largely slop still, and I think it's kind of dangerous to assume that like you have like a real good consumer product here, where in reality your product is the token and the gambling that's taking place on the platform. Like I think like over enough time, maybe we can prove that like there is like real consumer demand for this and like people enjoy using it. But I think if they had the tagline like Zora is for gambling rather than like Zora is for fun at launch, and kind of like promoted more of what we're seeing now initially, I think like a lot of people, including myself, would probably be more friendly to it. But also like I think everyone else raised really good points around it.
I don't think that there's any social media out there that isn't pure slop though. Like all social media now is pure slop. So
it's all converging to slop too, yeah.
Like I don't think you can blame Zora for, like I in fact think it's much better to hide it. Like I don't think you should go full like, oh come on our chain and we're gonna go full slop mode. Like I think a lot of people gave crap to Tolly for posting yesterday, and he was like I don't think meme coins and NFTs have intrinsic value, and like yeah, he's right. Like they don't have like that's the whole point. It doesn't mean that like you shouldn't speculate or like you should not want speculators on your chain. He clearly wants them as well. But you kind of want to hide it. You don't want to go like full like we're like industrializing the slop complex over here. No, you want to take the high road a little bit, but you shouldn't discourage people who are trying to like just speculate on memes and stuff. But I wouldn't blame Zora on that, Ian. I completely disagree with you here. Like you can't blame Zora for the slop on their thing.
Oh no, I'm not blaming them for it. I'm
No,
just
you
saying like
were. It's
I
okay.
mean, it's not even their fault. It's like it's a user thing. It can't be the fault of the platform itself. But I do agree that's like a good point in general. Like all social media and a lot of the internet is kind of headed towards like a convergence of you know, amounts of slop we cannot even comprehend. So
No, legitimately, every 3 weeks I
yeah.
see the same tweet, and I'm like, this is completely correct. The flex of the future will be that you can A, log off completely, and B, you can just write long form content for a certain 15 to 20 people group that you're interested in. There's no, this is irrelevant to the Zora conversation, but in general, this is
Yeah, I think maybe just to cap off the thoughts on Zora, I agree with a lot that's been said. I think the interesting take would have been to be long Zora, obviously before it pumped, on the assumption that like, you know, some kind of integration with base products and like a new design would be enough of a catalyst to kind of like you're saying, get the eyes on it. When price goes up and there's like reflexivity in the design, then it like gets people excited. And they want to chase that. But I think the question you have to ask yourself now is, if you're looking at this chart, like, I mean, I don't trade perps, but like, I don't want to short anything that has the freaking narrative behind it and people are just like top blasting into. Seems like a good way to get liquidated. But the question mark is like was mentioned, you know, markets are forward looking. Do you think the activity level today is going to be higher a few months down the road? And if the answer is yes, maybe you do want to buy Zora. If you think that we're in like a little bit of a, if this is a couple weeks of people, buying the things because the assets are all going up right now, I mean, things don't go up forever. So, I just think that's something to be thinking about for the forward-looking valuation here. You have to have a broader thesis and like a more fundamental view of like, yes, Zora can grow and be much larger because of XYZ reason. Not just, Bach and Westy made their creator tokens and they went up. And so now I want to get on the platform. Inevitably there's like a small list of people on CT and that list runs out pretty quickly. So if you want to see a larger kind of user impact, they'll need to scale that even more heavily. Cool. Any more big takes, or are we going to call it for today? I think that was a pretty good ep, gentlemen. Bach, thanks for joining late. You came in to make fun of Ian and yell at him, which is great. I feel like he needs that every now and then, put him
every day. Every day if I could. I love the Walmart chicken.
I think it's true. I'm writing a tweet about it now as well.
Cheese.
I think it's 100% true.
That's you never hear about Bach writing tweets. It's never really a writing process. It's just more firing off the hip. That's how you know this one is a refined thought. Dude, I mean, you're a great poster. That's why, because you don't think about it at all. It's like it just hits the brain and then hits the thumbs and then it's in the internet.
That's what great posters are made of. It just comes and goes.
Exactly.
There's no thought.
I think people would gamble on
the whole chicken thing. Maybe shelf that one then.
I don't know, man. Gambling on chicken prices. People were very excited about eggs for a while. There could be a market there. Like maybe we need to have a product. All right, we're running out of steam. We'll call it there. Thanks for tuning in, guys. We will see you again later this week on Friday, as always. Potentially again before then, if anything exciting pops up. But Carlos, Mark, Ian, Bach, thanks for coming on. Another great up of OX Research. We will see you all next time. Ciao.